Hello, folks. This is Raj Sastry from Raj Option Trading. Today, I want to talk about one of my favorite companies. It's JFrog. It's a technology company. It's in the software applications segment. With that, today is April 21, 2021. So JFrog, this is the image from JFrog website. They are into software continuous delivery. So if you look at any company like Amazon, AWS, Facebook, Splunk, all these companies want to release software very quickly. So that way they can basically bring new features to market very easily. So JFrog is a very good leader when it comes to continuous delivery. They will help organizations to really deliver the software very quickly so that way a customer can get very nice experience. So with that, this DevOps market size is projected to grow by a compounded annual growth of 19.1%. That's a very good compounded annual growth. So JFrog is really trying to get a good chunk of this growth and really grow fast. So with that, let's jump in. So if you look at JFrog, they have a unified platform for continuous delivery. So this is where companies are using this software for continuous delivery. The big companies like Amazon.com, Microsoft, Cisco, all these companies are using this company's software because it's so good. And they can also do hybrid or multi-cloud. They got 6,050 customers, and they got very good total addressable market and very good revenue, 151 million revenue, and nice revenue growth. I love this revenue growth. And they got nice free cash flow and also very good net dollar retention rate. I love this 133% net revenue, net dollar retention rate. That's a very good number. So with that at the high level, I think company really checks out really nicely. Now let's go into a little more detail. So, if you look at software development, there is a requirement, there is a design, development, quality assurance, release and maintenance. It's a, big cycle, as you can see, right from the requirement for the software all the way till release and maintenance. It takes long time. This is where, this is really, if you look at the software delivery in the beginning, before 2000, it's all waterfall. So you go from step A to step B to step C. If something goes wrong, you start from over, from the beginning. So that's why it's called waterfall. But, somewhere in 2000, we started doing the agile. This is when we started iterating small chunks, iterate, and, take it from there. And now it's all about continuous delivery and continuous development. This is why companies like Amazon, Slack, Uber, Netflix, all these companies can do really nicely because they can really do continuous delivery. They don't need to wait for 6 months for a requirement to get released into production. They can do it very quickly, on a daily, hourly, minute type basis. So that way, they can give the good experience to customer. So with that, let's jump in a little more into this company. So JFrog, it provides a DevOps platform, and they also act as a bridge between software development and deployment. If you talk to any software developer, they love developing the code, but when it comes to the deployment and delivery, the testing, that's where people are not that keen. This is why this platform or this company JFrog can really help to deliver, test and implement that package very quickly into production. So that way the expensive developer resource, they don't need to wait on delivery, um, moving the code to production, these type of mundane activities. So with that, stock price is 48.35. Stock has fallen very badly of late, and market cap is $4.52 billion. And CEO is Mr. Shlami, 88% approval rate. So it's a very good approval rate. He's also a co-founder. It's really good to see a co-founder still at the helm. And if you look at the stock chart, really, really ugly stock chart here, you know, basically lower lows all the way through. But now I see a sign of improvement. As you can see here, now there's a small channel here, and it's kind of showing some signs of improvement at this point. And they got good revenue, $150 million revenue, nice revenue growth, 38.80, and nice cash. I like this cash here, no debt, and nice operating cash and levered cash flow. And if you look at the CEO, they got a good slogan here: dream with the people I love, make it come true with the people who care. So I think this company really wants to, bring this product to market and really be there for developers. And the CEO checks out. He's a co-founder. He's got 20 years of experience, and he was also he also did some other company before, Alpha CSP. So I think overall the CEO checks out, and he's got good experience, and he's also well respected by his employees. So with that, if you look at the news headline here, CEO of JFrog, Datadog, PagerDuty, I think they discussed the future of DevOps, and JFrog expands the cloud DevOps offering. That's very good. And there is also news from street.com. The shares have bottomed and can be bought. I think this is when people watch the company's stock bottom out like this, and as they see some turnaround like this is when big institutions will come in and start buying. That's when it will start a the bottom or a consolidation. Then it will basically start going up. So overall, I feel like companies like big companies are using it. Their product is available on AWS, Microsoft Azure. So I think it's overall, I feel it's a good story now. Stock has fallen so badly. Now it's showing some signs of improvement, and this could be the turnaround. So with that, let's look at the quick statistics here. As you can see here, there's a upgrade from Summit Insights from sell to hold, price target of 50. That's very good. Right now stock is around, I think it's around 48. So I think there is an upgrade. That's a good sign. And if you look at the earnings per share, I think it's doing nicely. I think they did minus 32, minus 7, now it's minus 20, not that bad. And from a sales perspective, I think they're doing nicely. Very nice clip acceleration here. I love this sales acceleration. From a shares outstanding perspective, as you can see here, shares outstanding came down. So this is when when you see stock, the sales going up, the shares outstanding going down. That's when the supply, is reducing. So stock is really on a really short supply. That's when stock price starts going up. And from a market cap perspective, 4.64 billion. Price to sales is it's 30.74, not too bad. It's not very cheap, but it's okay. And good amount of insiders are owning this company's share, which is good. And also I think they got earnings coming up on May 6th, just around the corner. Nice quarter over quarter sales growth, that's also very good. And if you can see here, institutions are buying this company's share. So 14% increase in the institution purchase. This is when stock has beaten down so much. This is when these institutions will start buying the shares slowly, so that way they can form a nice low basis and take it from there. And target price, as you can see, is $75. That's a huge increase from current price of $48. With that, their performance, as you can see here, weekly minus 6.95, per month again minus 4.80. Overall, this stock has been on a downturn since the IPO. Now they are down 23.05 for 1 year. For year to date, for half year, they're down 38%. It's a really, really very bad performance so far. I feel like stock revenue perspective is great, and outstanding shares outstanding have fallen down. But for some reason, Wall Street is not still catching up to the reality. That might change as we go forward. Now, if you look at the fundamentals here, stock price is $48, market cap is 4.52 billion, and as you can see here, on 9:30, market cap was 7 billion. It got reduced to 5.8587 billion. Same story with the stock price. But if you look at the sales or revenue, that has increased from 39 million to 43 million. That's a very nice increase. And they've been surprising Wall Street on the revenue side. As you can see here, 1.17% revenue surprise and 1.02% revenue surprise back in 9:30. So that's a good revenue surprise. And from an EPS perspective, earnings per share perspective, they surprised on 9:30 2020. Now they're just in line. They got a good amount of cash, very nice gross margin. I love this gross margin, 81%, just like a SaaS company. I mean, this is a SaaS company. And price to sales is not bad. It's not very expensive. So this is the quarterly results of this company, 43 million in sales in Q4. If you look at the 2021, they guided between 44 to 45 million. So they're very conservative. It's a little bit above their fourth quarter earnings. I think that's a good sign that is at least they're giving some positive outlook there. And for the full year, they're anticipating between 196 and 204. That's also not too bad. I think it's a little above what they're doing right now, which is good. I think overall, I feel like this company is doing nicely. If you talk to any software developer, they love JFrog. Big companies are using it. So I think overall, that it's a good story. But Wall Street has not caught up to it yet. And arguably, there is some threat. Microsoft, as an example, they have their own product, which is which is also doing well. So this is where we have to kind of look at the competitive landscape also. But this company overall is doing nicely. I think a pure play, a public company perspective, I think JFrog is probably one of the prominent DevOps company in the market. So with that, if you look at their fourth quarter earnings here, the revenue grew 39%, which is good, and gross margin was, also is very good, and they have a lot of customers, and their annual recurring revenue, 352 customers had an annual recurring revenue greater than $100,000, which is very good. And they also had 10 customers with annual recurring revenue, which is more than $1 million. So the moment you have customers with annual recurring revenue, this is predictable revenue for this company. So that's a very good sign. I love to see the ARR or annual recurring revenue grow, even with the 100,000 plus and even 1 million plus. And nice net dollar retention rate, that is a very nice 133%. Cloud revenue grew. I think this is an important sign. They are basically pivoting to cloud, and their cloud revenue grew by 69%. And also, as you can see here, margin was good, revenue was good, outlook is also good. So with that, I feel like it's a good company, got completely neglected by Wall Street. There is always something new, shiny object in Wall Street, but this company probably got forgotten with all this news. So with that, let's look at performance of this company, which is so far not great. From a yearly perspective, 2021, 23% down, 2020, 25% down. That's brutal decline so far. And if you look at the monthly performance, solid downhill, as you can see, right from the IPO all the way to March, it's downhill. It's showing the signs of progress in April. That's a good sign. Now let's jump into weekly performance here. As you can see here, on a weekly basis, more red than green here. And when they fell, I think they fell really hard. Then they try to come back, as you can see here. Um, and one more thing, as you can see here, is really the volume. As you can see, the down volume here 3.73, the up volume 4.49. So this is one thing most people watch out and look. Whenever there's a stock going up like 10% up, if the volume is high, that's a good sign. That shows the upturn has got conviction. So this is what most people like to see. Now let's jump into daily performance here. So in the daily performance here, I think it's a up and down, down and up. But one thing I caught my eye is really when the stock went up on 21st April, which is today, the volume is high 713. So that's a positive indicator. It really tells us, hey, what, this rally has got legs behind it. It's not a fluke rally. So this is something that I'll be watching for as we go forward. If the stock is going up, if the volume is accelerating, that's a very good sign. I feel like at this price also, 48.35, it's good to buy some stock and hold it for a long time. I think you will not be regretting that. So as it goes up, I think if the volume increases, that's a very good story. We can even add more to our position. And the earnings is coming around the corner. You could also just buy after the earnings if you wish, but I have a hunch this company can do well, and they can surprise during the earnings. So with that, if you look at the insider trading here, nothing crazy going on here. Some of these directors are selling, but it's something these directors will sell all the time, which is not too bad, especially given that we have just seen their liquid their stock outstanding is really going down, which is good sign. And now looking at the technicals here, stock chart, it's a free fall in the beginning. Now it's kind of showing some sign of improvement. Earning is coming around the corner on May 6th here. And from an RSI perspective, related to strength perspective, I think they're trying to make a comeback here. 44 right now, I think it's a good time to buy. It's really oversold at this point. Good to buy some. It's showing some signs of improving, which is good. Implied wall is really low, so it's not too low. It's 60.2. So probably at this point it may not be a good idea to buy a lot of call option. But if you want to buy call option, make sure you will buy maybe 3-4 months out, so that way you don't pay too much time value or time premium to it. And if you look at DMI, the green line is below the red line. That's showing some bearishness at this point, which is always the case. Normally, when the stock sells off, the chart looks ugly. That's when you got a conviction to buy some and hold it. And from a on the balance volume perspective, it's kind of showing some signs of improvement. This is when I kind of when I see on the balance volume going up, and also check in money flow, it's also showing some signs of progress. This is when you can buy some. It's a even though stock is ugly, the moment you see indicators like on the balance volume and check in money flow at least in the positive territory, that's when you can buy some against the normal traditional wisdom. So with that, let's jump into option chain here. If you look at the option chain, this is again as of today, which is April 21. So if you look at the stock price 48.35, we have a option at a strike price 55. We got a huge open interest here, so that means a lot of people are betting the stock will go to 55 by September. That's a good sign. It's a good increase from the current price. And there are also people buying call option at 60 strike price and beyond. And on the put side here, you can also see some high volume around 40. I think people are really buying some put option to hedge probably their existing stock position, or just for the sake of making some money by holding put options. But if you look at the option statistics here from Thinkorswim, from TD Ameritrade, more calls are being transacted than puts, and that makes the put call ratio 0.37. That's normally a bullish sign, so people are buying more folks are buying call options than put options, which is good. So that's another reason why there is some leg for this new rally, with the volume accelerating. More people are buying calls, especially out of the money calls. I think that shows some conviction with the smart money. Now, what should we do now? We looked at JFrog, we looked at fundamentals, we looked at technicals. I feel like stock is showing some sign of around right now. It's been a free fall, slow fall since the IPO all the way to March. In April, it's showing some signs of turnaround. And it's also recently upgraded by Summit Insights. That's a good sign. And companies really expanding their product lines into DevOps offering, multiple types of DevOps offering. And they got 352 customers with the annual recurring revenue more than 100K, and 10 customers with the ARR above 1 million. That's a good sign here. Predictable revenue, always Wall Street loves that. And net dollar retention rate is really good, 133%. With that, I feel like really stock is oversold. This may be a good buying opportunity. I've been initiating some positions of this stock. It's good to buy when the stock is showing some signs of progress, but you don't want to wait too long, because stock might catch a good break, especially since the earning is coming around the corner. So with that, I feel like it may be okay to buy a small position now and hold it for a long time. So with that, thank you very much. Happy investing.